All right. Good morning, everybody. So I'm going to cover Sezzle Q2 earnings, just give some quick thoughts, and then I guess I'll share my position and what I'm doing with my position. So these are actually very good earnings. I just want to say that they beat on revenue, they actually beat on net income, and I want to talk about why the stock sold off. There's a few things. First is their net income is down year over year, and this is technically true. But last year in Q2, they recognized a 15 million, something like that, deferred tax asset. So it wasn't even a real cash flow. It was just a GAAP accounting measure that showed up on their net income. So their operating income was actually up year over year. And if they didn't have the deferred tax asset, there's no cash flow. It's literally just like a financial thing, right? Their income would have been up 100% year over year. Okay, so I think that was a bad headline. The other thing is the revenue is actually down quarter over quarter, even though it went up in Q1 compared to Q4. And there's a couple reasons it's down. So the first reason is some of the revenue in Q1 actually kind of technically came from Q4, but it was recognized in Q1, and it's just the way GAAP accounting works. So if someone has a late fee from a purchase they made in Q4, that gets recognized in Q1, or as what any fees. I mean, they're recognized at the time they are actually paid, not the time that the business occurred. So that's part of why Q1 revenue was up. Another thing that's happened is at some point, later in last year, they changed it so that on the platform that you could pay via ACH, which is free, and normally before you had ACH, when you made a payment, you would pay a fee. So even though it produces better margins, it's less revenue. So all these things are kind of showing up in that headline number of revenue down, GAAP income down. There was another comment about margin, how margin was down. The margin in Q1 was actually inflated. And if you actually look at their margin, I don't even know if I can find it. It's actually, here it is. If you look at their revenue as a percent of GMV, it's actually the same year over year. It hasn't changed at all. But because of the recognition of revenue that came from Q4 into Q1, it got inflated. So that's basically all the negatives right there and there. That's why the stock sold off, and that's why it's down. Whatever it is, I don't know what's going to happen today. They actually did, I think, gave good answer to the question in the earnings report, so it might be fine. Who knows? But in general, the headline numbers are extremely strong. Revenue is up 76% year over year, and I just always feel like it's worth mentioning with a company like this. Sometimes people freak out of it, but it's like the company's not trading at crazy multiples relative to what they're actually delivering. It's after the sell off. I think this is probably updated. Maybe it's more correct. I don't know, but it's 43 times earning. Forward earnings are 35. So I hope these numbers are correct. I'm just trying to think. They did 30. Basically, they're going to do 30 millions of earnings a quarter, so they're doing 120 million in earnings right now. Let's see. I want to know what their market cap is, and I'm just concerned basically none of these are updated, because I think this 3.5 billion, which is, if it's the case, it's trading at forward earnings at 30, which I don't think is that bad, given everything. So I don't know. Anyway, I digress there. What's also interesting is they're more than on track to reach their guidance. So their guidance is 60% revenue, 60 to 65% revenue growth for the year. And if we actually go and look, they did 271 million last year. So if we do 1.6 times 270, it's 432 million. And they just did $200 million in revenue in the first two quarters. So usually their Q3 and Q4 are really strong. I think they're on track to basically more than deliver this as well. And we can just see, year-over-year growth in revenue-generating users. Everything's up a lot, 60, 100%, great. Their mods are up quarter over quarter, and they're actually up from Q4. So you can actually see what I was kind of mentioning is hey, a lot of revenue from Q4 got recognized in Q1, and we can actually see this in their mods. What I also found interesting about this report is the active consumers were up 10% year over year. They have been investing more into advertising, and they're saying they're getting a pretty good payback period. But this is a good thing to hear. As you invest more into advertising, what's going to happen is, yes, your spend will go up, but if your payback period is 6 months, which they say there is, it takes time for these users to get on the platform, ramp up, and get to the point where where you kind of reach the max, average, the max revenue user will generate. That takes time. So I think it'll be interesting going to Q3 to see if some of this advertising revenue really starts to pay off and if we see it in the numbers. Um, yeah, and we can see the active consumers here is actually accelerated a lot in this quarter. It's up 100,000. It's just the greatest quarter-over-quarter active consumer growth actually in a while, and it is really because of this advertising. And we can actually see unique merchants is up quite a bit as well. This is relevant because a huge part of Sezzle's business model is you can use it anywhere, right? All very strong. Honestly, I don't really have that much to say. There's nothing that insightful. I think a lot of my spiel at the beginning covered what people need to know. I'm still holding, and I haven't sold a single share. So my cost basis is $40. I'm going to continue, and I'm happy to continue to hold here. And the reason why is super simple, man. It's really hard to find a company like Sezzle. It's really hard to find a company that has, management, like the CEO owns like 40% of the company. He quotes Warren Buffett, Charlie Munger after every single earnings call. Like, he's clearly invested in the company. They underpromise, they overdeliver. They have clear secular tailwinds in the industry. I think they have negative sentiment, but which is like kind of good because it means the stock is likely going to appreciate in value as sentiment changes. Like they still have a reasonable amount of short interest. There's still a lot of people who think they're committing like scamming, people are fraud. There's still a lot of people who kind of hate buy now, pay later, and that will change. So I'm a happy holder here. I did ride this up to 180 or so, which is where it peaked. Not that long ago, actually. We can just go look like probably a month ago or something. So yeah, it peaked here. Yeah, I guess that's a month ago at 180. So I have, that's a 50. I'm gonna say like a 50,000 differential in this position or something like that. Pretty crazy. Maybe not quite that much, but a lot. It went from being my largest position to my second largest after. Here I was looking at the wrong one. Yeah, after Robinhood. So, yeah, gonna hold long term. Not gonna sell. Overall, actually a very strong quarter. I don't think the headline numbers are representative of their business, and I think they'll bounce back after kind of next quarter. So, yeah, that's it for me.